Happy Monday. Hey, Jamie. Hey, Steve. What's going on today?
Happy Monday, Steve, Scott. How's
Hello.
everybody doing today?
Hello, Jamie. Happy Monday. I see your screen. I hear your voice. It's a happy Monday.
It is indeed. See, it's the simple things. Okay, Andy, hi to you as well. Hope you're not too hot there in Texas just yet. Um, Welcome to another edition of the Office Hours webinar. Today's March 13th, and before we get going here, as always, just want to get the legal team all happy here. So just want to make sure everybody is aware of the fact that we are a distributor of information to you guys. So everything that we share with you here today is strictly for educational purposes. Now, if you do need investment advice of any type, please seek out a licensed individual, and there are a plethora of those individuals out there. Just use your favorite search engine, and you shouldn't have any problems. So just once again, everything that we share with you here today is for educational purposes.
Have you seen that commercial with the guy who's pretends to be a registered investment advisor, but he's really a DJ? He stands up and starts dancing.
Yeah,
It
exactly.
didn't take long to convince him. All they did was cut his hair and put a suit on. I don't know why that just came to mind. I'm sorry, Jamie. As you
Well,
were.
it's funny because they ran that commercial for a very long time, and then it
Yeah.
kind of slacked off, and I saw it the other day myself, and I was like, well, sounds about right.
Anyway.
Before we get kicking here, for those of you who are new or that are not subscribers, just want to make sure everybody's aware of the fact that, first we did create the groundbreaking, award-winning technology that is Trade Ideas, and then we finally realized, probably it would be a good idea to build a community around that technology, and so we've done that. And sure enough, people are responding to it as our subscriber base continues to expand and the chat room continues to expand, and that's where it kind of all starts, and that's up top there. The Daily Traders Room, which is free, whether you are a subscriber or not, you can create an account and join the crew. It's moderated by Barry Anderson, who does a fantastic job at sharing and teaching and keeping everybody in line there. Of course, today we have office hours with myself and Steve, trade of the week. Steve takes the helm tomorrow, and we have hump day.
Actually, point of clarification, Jamie. I'm sorry. Andy's doing some shuffling for some time off, so he's going to be doing the trade of the week tomorrow night, and I'm going to be doing the Thursday webinar, just for those that are interested.
Aha, well, thank you for that info. So, yes, okay, we'll switch it up this week. Of course, this is typically how it regularly operates, but just trying to give everybody a little bit of a different flavor from different people. And then typically Andy does round it out on Thursday, but I guess it'll be me and Steve this Thursday. So 4 webinars coming at you every week, and because we're nice guys, we give you Friday off. All right, so let's get into the agenda for today, and I guess I'll pass that baton over to you, Steve, and let you do what you do with these indices.
Let me see if I can do that. There we go. Screen number 1 without all the unicorn characters. Awesome. All right, so, continuation from the election all the way up to here. Kind of overbought, but, there's an old saying, markets can remain overbought and oversold longer than you can stay solvent. So we never try to really base our opinion on overbought. That starts to jump into the notion of, I think this market's gone high enough and I'm going to be the smart guy to call the top. Well, I don't want to try and be that guy, but we've definitely had a lot of upward movement, to say the least, to the upside. Today was, interestingly, 2 things. I think it was a 70-cent range, tiny range. Our buyers did show up at the close a little bit, a little wick on the downside. Our buyers showed up at the close on Friday. Our buyers showed up at the close again on Thursday. Thursday was the real test as we dipped down below into this gap. And then once again, end of the day, is the candles we like to really focus on, the buyers stepped in and propped us up both Thursday and Friday, and then again today with the bias today. But boy, the volume today was extremely light. 57 million versus 80 or 90, 100 usually. So very light volume on the spiders, very tight range. So, I'm sure CNBC was talking about the tight range and probably talking about Snapchat and all the other fun things they like to talk about at their level. But we've got some other things we'll try and show you on a day like today when we don't have a whole lot of room to work with. But bigger picture, last time we spoke, I said, we could be looking for an area to dig in and bounce off of. Well, for the most part, I think that did happen on Thursday with this long hammer tail here as we'll just call it the gap, basically gap fill right there for the most part. So we'll go ahead and add that new line. It starts to make some sense to us, but we need to continue to move higher and stay above this line. If we drop back below this line, I think we could start to get a little sloppy. So that's the S&P. How are the Qs looking in terms of leadership? Qs are looking really good. I mean, they barely filled their gap, and they are close to making some new highs here. So the NASDAQ is close to breaking out to once again creating some blue sky levels that have never been seen before. The diamonds, not so much. Interestingly enough, the diamonds are not looking like the Qs. So for the moment, our infrastructure, our blue chips, our big three, our big companies are a bit more languishing here compared to the relativity of what the NASDAQ is showing us. So mental note there. And then of course I would love to report that the IWM, the Russell 2000, has found its way out of its doldrums, but no, it hasn't. It just continues to sink back down into its range. So, we don't have all four major markets firing on all cylinders. We basically have the SPYs that kind of filled their gap and dug in a little bit with some low volume today. We got the Qs that are basically back on point as our leadership. But boy, just continuing to be oversold, overbought, I guess you could say, in some cases. Which what I'm going to do is I'm just going to quickly bleed into something new. One of the trade of the week that we chose this week was GDXJ, and it had a great day today. I'm very happy that it just came right out of the blocks and did exactly what we thought. But got a new one I'm watching, and the reason I used the word overbought a couple times was I wanted to maybe look for something in the market that wasn't so much overbought, but maybe more of an oversold nice entry, a nice pullback type entry. So last night, I actually have it here. Let me do this for you. Here was a tweet I sent out Sunday night, and this is the alert I'm about ready to show you right here. I call it oversold 5-day bounce, and this is last night, time stamped 19 hours ago, new scan, oversold bounce. So the market had me thinking, what can we look for some of our oversold indicators? Well, here it was, GDXJ right there near the top doing some great relative volume as of Friday going into the weekend. So I kind of made a prediction that GDXJ was going to lead the way on Monday, and it also became our trade of the week. Well, as it were, GDXJ was up 4.2% today, kicking butt almost double or triply over all the other ETFs. So happy to have been able to have identified that one, but real quickly you guys are probably wondering, well, how the hell did you identify that? So basically this is just an oversold scan that I threw together recently. And when I say recently, it's because there's a little secret sauce in here, and I'm going to kind of tease a little bit, but there's a guy out there that you guys may know. He's a very, very close friend of mine, has been for a while. His name is Brian Shannon. He's Alpha Trends on Twitter and StockTwits. He's written a book of time frames of stock trading, still a very, very relevant book in my opinion. But he's got one filter that he uses and he lives by. He calls it the 5-day moving average, and the way he computes it is using 130 15-minute candles. So if you were to divide 130 periods by 15 candles on trading days, you'd get an exact perfect 5 days of trading. So in 5 days of trading, we're dealing with 130 15-minute candles, and that's essentially what that average is. That's kind of just a benchmark. Is it above the 5-day moving average? It's very similar to VWAP, but it's not quite VWAP. So what I basically did on the scan was said, well, let's try and find some things, one, that have some decent volume to them. So we've got a 1 million share 5-day average, and then we also had relative volume, at least a value of 1. But in position and 20-day range, what I basically said was, look, I want to see stuff that's really sold off in the last 20 days. So If 0 was a 20-day low and 100 was a 20-day high, I was capping it off at 20 for the maximum. So we're finding stuff that really fell precipitously over the course of 20 days and hasn't recovered much. However, here it is right here, change from the 130 period. This is what I call my 5-day moving average that I borrowed from my very good friend Brian Shannon, and I will always give him credit for that. So 0.01 is basically saying, hey, yeah, this thing fell very precipitously over the last 20 days. It's very oversold, but guess what? It's above that benchmark that I like and we all like to use, the 5-day moving average. That was pretty much it. And that's how GDXJ showed up last night or over the weekend on the scans, and actually wound up curating with the guys at Trade Ideas, naming that as the trade of the week this week. So that is how, since I'm not speaking tomorrow, I don't know how much Andy was going to touch on that. I just wanted to briefly go over that. And oh, Steve, I hope you can share that oversold scan. Sure, I'll be happy to do that. There's no custom formulas in here. There's no magic. It's just, I was trying to find something that foot the bill. What's oversold but had a really nice bounce on Friday and is giving us some lift above the 5-day moving average. So, yes, Mike C., I'm happy to go in here and drop it into the chat window. I will paste the code right there for those that are interested that want the copy of what I was just demonstrating. It's now right there waiting for you in the chat window. All right, can I add the oversold? Yep, a couple people are requesting it. So there we go, guys. It's in the chat window. Took a little bit of extra time talking about the market, but since I'm not going to be doing my trade of the week tomorrow, I wanted to just talk a little bit about how we found that one and maybe a little humble brag as well.
Hey, that's good stuff, Steve. I mean, just excellent use of the technology in action,
Why, thank you, Jamie.
Yes,
all
sir.
Right.
Yes,
sir.
sir.
Take it back to you. Go ahead and take it back.
Yeah. Let me switch back here. So while we're on the topic of, the market and the low volume inside day that was today, of course, Steve, having our, ears to the ground in the Twitter universe and our other little network of trading buddies, a lot of the same comments today, inside day. Even, some diehards were like, I don't feel so good, the action's bad, I'll see you guys tomorrow. But, fear not, because there were many, many opportunities out there today if you knew where to look, right? Whether that was reading into what Holly was doing or looking at some of the other top lists that we've created, and we'll show you guys here shortly. But not that anybody in their right mind listens to CNBC during the regular trading day for anything other than entertainment value. If that entertains you, great. But if you're trying to get valid information on what's moving out there or what's outperforming the markets, well, you're probably going to be kind of out of luck there. They'll be happy to sit up there and talk about Snap, the latest IPO, and how the market is not doing much of anything as a whole. But man, that's hitting on 2 data points out of, well, pretty much infinity, wouldn't you say, Steve?
Yeah.
So, while what they're saying might be accurate, that's sure not helping you find any alpha out there, find any trades that could, if traded well, translate into money, right? Because money's just a byproduct of good trading. So we've got lots of Holly stuff to talk about, but before we get into the Holly stuff, a couple of examples I'd like to point out here. We're going to kind of go in reverse here. Don't snap, look left. Well, Snap's had some pretty decent volatility, so you can't knock Snap for trading, right? So if we pull up Snap, here's the action for today. Hey, there's plenty of action in it from a trading standpoint as it approaches its all-time low, which goes back a whole few days, right, Steve? Hey, we might be there tomorrow, and that's about as far as we can squish the chart up. And Snap's been a hot topic of, well, conversation, debate, and we were having a conversation about Snap earlier today, myself, Dan, and Brad, and Steve. And first and foremost, we were having a good laugh. Let's see. How many is that accurate, Steve, on the float?
Float?
266. Yeah.
Seems right.
Right. So 266 million shares out there. Not exactly a small float, right? So we were all discussing that even way back in the 90s, when some of us were cutting our teeth on the other side of the business, which was the brokerage side, not the trading side, IPOs, boy, that's what you wanted. Those were the ones that worked, and they were
money if you could get them.
Yeah, and if you could get them. And so I'm going all the way back to the early 90s, and even back then, yeah, an IPO might be hot. In other words, what we mean by hot is there's way more interest than there are shares to go around. All right, so the stock might have been priced at $20 on the initial IPO, but because there's so much demand for it, well, the people that got the IPO shares at 20, that thing opens up at 30 because it's so hot. Well, what a great deal. Only problem is you can't get the IPO shares. You just can't get them. You know, I'll throw some figures out here, and this is a rough estimate, but let's say I remember I was so excited about a few of the IPOs back then, and I would drum up interest for 10,000 shares worth. I'd get 100. Here's 100 shares, and I'll make sure you disperse that amongst your clients. Oh, well, gee, thank you. Oh, and by the way, you can't sell it for at least 30 days. Oh, okay. So that's kind of the way it would work. But the biggest thing that is still being perpetrated in that IPO market is that they would tell you this. Oh, well, don't worry, because if you can't get the IPO shares on a hot IPO, the next best thing that you can do is buy it in the immediate aftermarket. Okay. Well, wonder how the snappers that bought in the immediate aftermarket are liking Snap right now as far as an investment.
Well, they're learning a valuable lesson about the every generation does about exit strategies, which those guys created an exit strategy on a product that the millennials are extremely competent in using. I read an article that there was a tremendous amount of the generation to the millennials buying up Snap shares, a couple hundred shares in their accounts, in their Robinhood accounts and whatnot. So unfortunately, they're going to probably learn a very valuable lesson that all the meat on the bone was taken out at the VC level, mezzanine level, first, second, third, fourth round, and this is the big exit position for these guys. And the bag holders are going to be people who bought this thing on the open market probably for a while. I don't know how long. I don't think this thing is as valued as it should be, but I'm not a fundamentalist. I'm somebody who likes to trade stuff with, proven track records on the charts, not just 8 days of candles and a bunch of crazy innuendo. But I think the snappers just found out what holding the bag means.
Yes, indeed. It reminds me of some of these old trading stories, and I won't bore anybody with those. Plus, I'd probably tell them wrong due to my old brain. But in any case, that game is still the same. It doesn't matter if it was 20 years ago, 40 years ago, or current day. That's what an IPO is. They're like, okay, we've built the company up. Let's all take our payout. And of course, not to say that some companies don't continue to do well. If you would have embraced that strategy on Google, you'd be pretty happy right now. But that's Google, right?
Even with Facebook, you had to sit a little bit of pain, a little bit of wonder.
Right. So, hey, me being the constant, eternal pragmatist, hey, if you can't get a hot IPO, wait and see what it does. If it takes off and runs, well, missed money is better than lost money, but a lot of the times on a decent company where there is a certain level of cash out, it will, find its proper evaluation at some point. So I'm not saying, disregard all of them, but, now you know why you can't ever get the hot IPO, because it goes to the institutions. They get to also flip it back out while the insiders are cashing out, and, they're looking for buyers. So just keep that in mind. All right, so why did everybody get all crazy over Snap, though? Because they were told it was hot IPO. It's used by millions and millions of people all over the world, so it's got to be good, right?
Discussed ad nauseum on CNBC.
It'd be a good investment. Well, as I like to say all the time, most of the time things are not what they appear, right? But really, why did everybody buy Snap, Steve? Because they wanted to make money in the market. And Snap is one of the latest IPOs. It's got all this buzz. But guess what? Seems these days, not only in the financial markets, but in the news markets in general, what does it mean? You know, this network tells me one thing, this one tells me another. Who am I to believe? Well, you know, everybody's ultimately responsible for doing your own due diligence on everything, right? But they wanted to make money, and they wanted to do it interacting the U.S. equity markets. So, Snap, big pump, you know, pumped up IPO, didn't deliver to most everyone the expectations that they thought it. You know, the expectations just didn't work out, all right? So it's time to simplify and go back to what we do all the time. We create high-quality windows. Maybe it's Holly. Maybe it's an alert window, or maybe it is a top list, okay? So real quick here, if I can find my screenshot here, just want to enlarge this screenshot. You know, not only do myself and Steve teach people at Trade Ideas, we've been using the product since it came out. We go way back. I'm sure we're not going to bore you with our histories again, but we've traded a lot of shares. We've pushed many, many buttons and continue to do so. What you're seeing right here, this is a blotter that Dan snapped earlier in the day. We've got an account we've kind of been, you know, passing around amongst myself and Steve and Dan, and so it was Dan's turn. So Dan posted a bunch of positions during his turn and felt compelled to send over the screenshot today. All right, so many profitable positions here. You know, a lot more green than we're seeing red on his open P&L, a little over $2,000, and you know, showing some moderate share size. You kind of, you know, this is a most 500 and 1,000 share lots on some TI generated plays. But I wanted to show everybody this particular one here. Take note of the entry price, 99 cents. It was an execution today. So this little guy right here, and by the way, yes, anybody that wants it, we will drop it in the window so you can get the cloud link. Alpha predator stalking. And for those of you who have been subscribers for a while, you know that alpha predator in one form or fashion has been around for a while. But as the market continues to evolve, you have to make adjustments. And so now this one is alpha predator stalking. This little guy showed up right after the open. INNL. We'll look at the daily here. So if you've been attending, you should look at this and go, yes.
By attending, I think he's talking about Barry's room. This is the kind of stuff that they're on there in the live Trade Ideas morning live trading room, which is free, which is a great price. Free.
Right. And whether it's the trading room or some of the setups that Steve and Andy and Dan and myself have shown people in the past on the trend change lubricant, everybody's going to realize, you know, this should be recognizable. You know, we've got this stock down in the doldrums compared to its long-term chart, right? And then we got the nice little flat area, and then all we're doing is looking at this nice little range break here. Right?
And the volume behind it, of course, didn't hurt. I think it was 52 times relative volume, if I wasn't mistaken.
Right. And, you know, Dan's price was right here, just under the $1 mark of 99 cents. But you can see, whether you bought it on the initial push or anywhere as it hugs that area before it makes its push, plenty of time, lots of shares traded in this area right here. Now, you know, just a simple example of something that made a pretty substantial percentage move, you know, if we just use a round figure of $1, you know, what did we top out at today right before the close? You know, almost up 70%, 69 cents. And even more beautiful is this action right here on the gap fill. So, you know, at the close today, what are we looking at right about here? So we've got up here. It's going to be interesting to see what transpires tomorrow. I guess all the technicians would have liked to seen a close, right, Steve, above that line. Didn't quite get there today, but only reason, Dan and the people in the trading room, by the way, because Dan called this out live in the room, I believe, today. So if you're in that room, which, by the way, is free, you were given this today. All right, and that happens all the time in the trading room. So if you haven't been attending, what better reason to go in? And it brings up another, let's go back to the CNBC example. Haven't listened to it in years. Steve, I don't know when you turned it off, but, guess what? There's plenty of other things that are doing the same thing. All of these positions, INAP, these little guys are happening every day, day in, day out, and you're never going to hear them talked about on CNBC or pretty much anywhere for that matter other than an environment like we've created or, I'm sure some other chat rooms out there might have been talking about this. Of course, they're probably using our technology to find it. But, when the masses are getting all hysterical about Snap,
and we're finding alpha and these little no-names.
Hold certain things. Okay, well, if you believe everything that was told to you and you bought Snap on the initial offering day and you paid somewhere upwards of $26 for it, you're kind of upside down. Whereas just on one trade today in INNL, presenting a 70% increase. Not to say that you could have timed it perfectly, but hey, 25, 30, 40% today from $1, and if you exercised a few, hard and fast risk management rules, could have got out a half in the first run and kept the other half to see what happens tomorrow. All right, so don't want to get too far off topic, but just felt compelled to talk about that. The insanity that was Snap, money, money, money. Oh, okay, well, that's fine, but we like to turn the noise level down over here, filter the information so that we can actually have a good clue at filtering out what's real and what is not real. What can I actually do here? What's available to me, right? Well, if you listen to CNBC, it's just Snap and nothing going on in the market. But a much different universe you can create for yourself if you just know how to tune the dials. All right, so let's do that. Let's talk about Holly and what went on today in her universe. So as we're going to see here when we look at her P&L graph today, it was pretty noisy on the first half of the day. Now, that does bring me to another topic that I forgot to make a slide for here. So let me check the time here. All right, we got plenty of time. So let me find the screenshot that I forgot to include. Steve, yes?
No, I'm not following you.
Well,
I will.
I'll
figure it out real quick.
I had to find my screenshot here, and it was hiding under some stuff. Okay. Well, I thought that was the right one. Okay, so I'm not gonna waste time looking for my screenshot. I'm just gonna tell you about what was going on today. All right, so everyone's probably heard about this window here that we have called a compare count window, right? It allows us to take strategy windows of opposite natures, like turbo breaks up and down, and put them in here and have it keep count. All right, so taking into consideration, well, we're on the topic of sometimes things aren't what they appear. Here's the SPY in the 5-minute in our paltry little range today, but a down move nonetheless from here to here. Well, these two guys right here are looking at the big caps, the 5.4 billion cap companies, right? So the big boys. Now, I took my compare count reading today, and at this level right here, even down here, we were seeing a very large buying bias going on in the big caps today. everything that was coming through here. All right. So on a day where we had downdraft and everybody read, today was one of those days that the institutions, they were buying many, many things today, many more things than they were selling. So, you know, perfect example of, oh, well, we've got the perception of selling, and we all know it happened on very light volume today. All these indices right here, relative volume was well below normal all day. So, yeah, okay, makes sense. What better time to get all your buying done than when there's a perception of selling out there? Okay, so now let's talk about Holly. Boy, I'm just challenged with my mouse today, Steve. Okay, so it was pretty noisy the first half of the day. You're going to see that on our charts. With the strategy count today, we had 5 longs make the cut, 3 shorts, and a total of only 14 trades. All of those were long except for 2 short trades today. But there was still some nice risk-on opportunity on some of the individual trades. So let's take a peek here. And I'll put this over here and put that cloud link in just a second. All right. So first and foremost, let's talk about SSTK. Because here's Holly's entry right here, and we'll just draw a line straight across. Easy reference, make this a little larger. Okay, so first let's look at the overall chart here. Risk on today, you can see, and hopefully in the future, I think we should probably make these charts a little bigger because I'm liking them more and more as a little leading indicator and how we can temper our expectations. So we can see here on the risk on, green, slightly red, green, red, and then whoosh, we took the red elevator down today, and then for most of the day, spent all the time making it back up, and then things got interesting when she finally did get her head above water. And of course, risk off today, where she's closing things out, it was still a struggle. So the beginning of this chart right here, risk on, the beginning of this chart, very similar. Okay, so when we see the statistical model having this much difficulty in the beginning, flopping from red, slightly green, red, green, red, green, red, and then finally taking the elevator right down, that's our leading indicator, ladies and gentlemen. That's saying, okay, the statistical model is having a hard time here, right? And I'm not taking away from anybody's trading skills out there, but if this stat model is having a difficult time, that should be the little guy, not sure which shoulder this little angel would sit on, but he'd say, hey, be very careful. You know, if you've got a profit and it's bumping up against some resistance on the long term, you just better take your money because it's going to reverse on you. All right, obey your rules. Don't overtrade. When you see this type of activity from Holly early on, that's what you should be telling yourself. Okay. Now, of course, we go into the statistical doldrums here. You know, the doldrums where the pirates would get stuck out in the doldrums where there's no wind. No, they're not going to go anywhere. So
is that what the doldrums actually means? No wind?
I think so. I
just learned what doldrums are. Good job. Thank you.
That or I've been watching entirely too much garbage television. But, you know, whether we're on risk on today or risk off, you can see the void was inescapable. All right? But then, you know, that's what Holly's for. She's going to surf when the waves are coming in at 1 foot. She's also going to do her thing when the volume is terrible. And we all know it was terrible inside volume day today. Well, in some ways it was terrible, but in other ways there was plenty of beauty out there if you know where to look. So your ears should perk up and your eyes as well. You know, if we know the stat model's having a hard day, we're keeping our powder dry, but then lo and behold, boom, later on in the day, we're like, what's this? She comes all the way back from a little over a point down, and now she's green again, starts doing her little dance again, but this time completely different. We catch some traction, right? Things start to work. So that's why even the blotter, or even though the risk on today was only 66 cents, you know, if we were interacting in real time, like on SSTK, and of course, the stop loss is the stop loss is the stop loss. That is the risk for this trade. Now, Holly gets out for a loser for the reduced risk function right here. Stop loss had never been triggered, but she's got the right to do that because we gave it to her. Same thing when she gets out on profit save. So, like to, try to get this point across. That's not really the strong suit for Holly. Holly's superwoman powers, I should say, are the ability to deliver statistically weighted entries, right? Now, we had to give her the reduced risk and profit save. Why, Steve?
Because we do not allow good trades to turn negative. A human would never do that. We don't allow trades that are not working to just bleed down to the stop loss just because there's 10 more cents to go and it's a foregone conclusion. Why stick around? And that's the reduced risk. There's oftentimes you'll see a reduced risk on there, which the AI is basically saying, this trade is not really developing like I thought it would. And if this thing doesn't start to kick into gear soon and get back to flat or do something, we're just going to fish or cut bait and go ahead and cut bait and take a smaller loss and not allow a stop loss to trigger it.
Yes, well encapsulated. So it's basically reduced risk and profit save were both implemented to really keep a winner from turning into a loser, right? So Holly's not the best on exits, right? So when we're in a trade with Holly like this SSTK here, and we're like, oh, yay, we bought it, we're profitable. Oh, no, now we're not profitable. Well, Holly's stop loss came close. But when it comes down to brass tacks, the stop loss was not hit, right? So, that's what we do. We assess risk, and we say if it passes this line, we will take our loser, take our lump, look for the next play. Now, we were out of the money a little bit longer than normal on this play, but it ended up working, right? So, even though Holly's going to get nervous and plug out, that's really not what we should be focusing on here, in my opinion.
And on the heels of what you just said, and going back to what I've been saying when I do the market recaps with these 3 o'clock buyers that just come in, seems like I've seen a lot of the histograms on risk on. We start kind of sloppy morning if there's a lot of longs, and then as those 3 o'clock, 2 o'clock last 2-hour buyers start to show up, some of these trade arounds start to come back to life. So until that changes, the trade around concept of keeping your eye on a trade that may have been stopped out or got out early is definitely a good idea until that type of market changes, meaning the mysterious end-of-day buyers, be it whoever they are. Some people think it's just money being put to work, 401ks, and that's where the best transaction volume and auctions are going, where they can do their business at the end of the day. So until that changes, the trade around is a very, very much alive and well concept for these picks.
Sure, and on this TTPH, another pretty similar example. It didn't back off near that much, but once again, here's our risk down here. Here's our entry price. Once again, we start hugging that statistical entry line, and that's not just coincidence. It happens a lot. It happens on this is like Groundhog Day pattern school right here. So we get a nice little consolidation, and then boom, another pass through the signal, and then off to the races. Once again, our stop loss never came close, but Holly, she's a little nervous on days like today when we get these wicks, and as time progresses, her little algo is going to get her to plug out. -6. 6-cent loser versus 31 cents left on the table. So that's a pretty big difference, on a percentage basis here. And then the last one here. Yeah, just like commissions. Yeah. Hey, I beat the market every day, but when I'm said and done, I'm down a little bit on commissions. That's something that I hear every day from a lot of individuals. So yeah, every little bit counts. Another classic example of the same thing. This little guy doesn't move around a whole lot, but it's the pattern that we're interested in here, and looks very similar to what we just saw. Entry here, retracement back down to the signal, hugs it for a little bit, and then marches on back up. And that reminds me of something. the what was it, CTCM from last week? Was it, Steve? I think on Friday.
I'd have to see it.
Well, I might be misquoting the symbol, or it was very similar. I was giving a training session to a guy today, and that big mover, he got the signal from Holly, and he's like, it's my own fault. I looked at it and thought that it hadn't done enough volume today. And I think, the stock had traded 100,000 shares by that time, or slightly under, and he didn't take it. It brought up a good point, because I'm like, I hear that more times than you think, because people, they know that Holly's a statistical model, right? But I think sometimes it takes a while to sink in about how powerful statistics are, right? These aren't just randomly generated things here. There's tons and tons of heavy lifting going on behind the scenes here. And so, I just told the guy, I'm like, well, having a 62.5% statistical edge on your side is light years away from a 50-50 coin flip, right? Light years away. So, a trade can go on many different merits. Maybe it's the pattern. Maybe it's the statistical probability. Maybe volume has something to do with it, right? But he even said something next that even made me smile very large. And he said, and then the next trade that came out looked like the pattern that I like to trade. So I'm like, bingo. Now you have double confirmation. You have statistical weight, and then you have something that you recognize behind it as well. And sometimes you might even notice that there's a lot of volume there too. So, just keep that in mind. That's kind of like the three things that I keep in my mind. I'm like, okay, statistical weight is this, looks good to me. It's not always the exact pattern that I like, but if the statistical probability is there, that's good enough for me. And then when I do see the ones where, hey, that's also the pattern that I like, even more so, those are the ones that you could typically get a little bit more aggressive with. And maybe that's the one where you identify the buyer early, and because you've seen these webinars with myself and Steve and Andy, you'll even know when to add to a position, right?
Which is one of the hardest things to do.
It is.
Add to a position. Mm-hmm.
Okay, so, kind of an interesting, this is not a characteristic performance from Holly, being down like this and then finding some traction at the end of the day, but this is what happened today. Now, did it have anything to do with it being an inside day and low volume? Big maybe. Big maybe. There's no way to know unless we could study and take into consideration all the factors, which I'm going somewhere with this. This is what Holly does. He takes in the data from today, which he's doing right now, and our database is filling up with today's data. We're going to kick that last day of data out on the 65th trading day, and we're going to start doing the number crunching. Holly's going to start making the digital donuts for you guys tomorrow. So the heavy lifting is really the big thing here, ladies and gentlemen. Teams of people cannot get it done. So this is what we're bringing to you guys, to the market, to everybody. Keep on watching. Keep on watching Holly. You are learning by default. Keep coming to these webinars. Like Gretzky said, half the battle's just showing up. Now, what's the other half? Getting high-quality information. We put in the work and we have the high-quality information, and we apply our statistics and our rule sets. We might not win every day, but we should be green every month.
Sounded good.
All right, Steve.
I like that.
Anything else? Any other? We talked about the top list, the one I'm about to drop into the chat window. We talked about Holiday. We talked about Snap and what the overall market's doing. I don't know.
I think that might be it. We don't have anything set up for giving out any scans today, so nothing there. We've shared that guy earlier in the session, but you can share it again, of course.
Okay.
We touched on it.
I just dropped the Alpha Predator stalking into the chat area for everyone to grab that cloud link. If you're a subscriber, you know what to do. If you're not a subscriber, you still know what to do, because when you click on it, it tells you what to do. All right. Well, Steve,
Yep.
we're at the end of our informational volcano. Then, Scott, if you're on the side of the stage there and you'd like to tell everybody about the discount code for the week, we're ready to hear it.
All right. A couple items. We may as well just also mention there is that Brokerage Plus build available. If you are an interactive brokerage client, you're going to want to get that and try it out at least. Trade-ideas.com/beta takes you right to where to download that build. And that includes a Brokerage Plus, which for now is free and included with all Prime subscriptions. After we take the Brokerage Plus out of beta and put it into our, excuse me, I had feedback there. As soon as we take it out of beta and put it into the regular build, it's going to cost over $1,000. So you're going to want to get in on that now so you can get it for free. And again, only interactive brokerage clients, but it's coming soon for everybody. We also have a podcast. We've had that available for a couple of months. It's growing in membership, and you can find it and add it to your podcast downloads by searching for Trade Ideas Podcast in any of your podcasting apps. New ones every Friday. Last one was good. Get on board with that. Save 15% off your first month or year using the code PROHOLLY. That's good this month. PROHOLLY, all caps. You can also download a handout that contains this information and our contact information by clicking on the handouts panel in your GoToWebinar interface. There's a little arrow or plus next to that you can expand and then download this. And that code is good for either premium or standard. Now remember, the standard version and the premium both include full hour of one-on-one training. So as soon as you sign up, just get on board with that and get that training, in addition to going to the trading room every day, because that's live and that's great orientation. So are the videos that we have on our YouTube channel. And that training is a great thing to schedule as soon as you have played with our software for a few days and figured out what your questions are. Schedule that. Steve or Jamie or Andy will help you out and get going. So shoot us an email, info@trade-ideas.com if you have any questions, or you can reach out to Steve or Jamie directly at the emails on your screen there. Also follow Steve at Today Trader or Jamie at QuantBot. Dan Merkin is at Trade Ideas 1. We also have at Trade Ideas and a couple other Twitter handles you can find. Facebook.com/Trade Ideas Pro. Follow our page on Facebook and share the content we post there. We post some original stuff sometimes. Share it with your friends. 619 number is great if you have any subscription questions during the working day. Thanks everyone for joining us. We're going to get this recording up tonight and shoot you an email reminder tomorrow about where to find it. Thanks, Steve and Jamie. Have a good one.
Sounds good. Thank you.
Thanks, everybody. Have a profitable week. We'll see you tomorrow.